Welcome to Intralink's September quarter update and outlook. Obviously, you've got Fred Strauss here, Chair of our Investment Committee. Just give us an economic update on both here in Australia and particularly the USA.
Paul, news out of Australia, we got the GDP growth numbers for the 12 months ended June, and that indicated the Australian economy grew 3.3%, very good result. Trend growth or expected growth for Australia, or target growth really, it's about 3.25%, so it's spot on. It's really a successful transition out of that declining mining investment with compensation on net exports. The other news during the quarter is Reserve Bank of Australia lowered interest rates with 0.25% in August, and then stayed on hold in September. And we think that's probably where they're going to go for the time being, is staying on hold. The US Federal Reserve at their meeting, and they've indicated quite strongly that they will hike interest rates in December meeting, and then the expectation is for another 2 interest hikes in the US next year. As far as the US economy is concerned, it's been a little bit disappointing when you look at it from a GDP growth perspective. Second quarter growth was around about 1.4% or so pretty below the expectations really. But the US Federal Reserve has indicated that they think the third quarter growth will pick up nicely in the US. But the US economy has really been about job creation. Unemployment right now is 4.9%, so they had full employment in the US, and they're still generating jobs at about 180,000 per month on average in 2016. And the indications now that the blue collar, lower end of the job market is coming into the job market. The workers is coming back into the job market. It's pretty positive.
I suppose that's phased as well. That wage growth comes through as a result of with their wider economy and how that flows through, and I suppose financial markets as well.
So wage growth. We expect wage growth to start picking up in the US, and that will help with the second phase of that recovery in the US. Financial markets for the September quarter, that was pretty positive, black everywhere. Our market, the ASX 200 index here in Australia, was up about 3.9%. The US S&P 500 up just over 3%, 3.3%. The FTSE, even with the Brexit, was up 6%. Obviously, the pound weakened significantly against virtually all currencies. And that obviously is helping UK businesses. But so the FTSE up 6%, DAX was up 8%. So all pretty positive. And the other aspect as well was there was a lot less volatility in the September quarter. The previous quarter, June, we had quite a bit of volatility, and that was to do with the Brexit. This time around, less volatility, a little bit of a spike just before the US Federal Reserve meeting, but less volatile. So if we include dividends, then the Aussie ASX 200 accumulation index was up 5% for the quarter. Good result. And then for the year, for the 12 months ended September, was up just about 13%, including dividends. And normally the expectation is long-term expectation out of equity markets about 10%. So investors done a little bit better than that for the 12 months ended September. I suppose what was noteworthy was listed property trust. They really performed well over the last 2 years, as we know, 20% increases. But for the quarter, listed property trusts were actually negative, around about 4.4%. If you include distributions, it was down 1.9%. So there's obviously a bit of a rotation out of listed property trust. I think the market is looking at those long-term bond yields, and now that the US is on the path of start hiking rates, that those bond yields will slowly start picking up. And that will obviously have an impact on property valuations. We're still pretty positive on the US economy, and then if the Reserve Bank in Australia is on hold and we start seeing interest rate increases in the US, then we think the Aussie dollar will probably go a little bit weaker. So given that, plus the positive outlook for that US economy, we're still increasing our exposure to US equities a bit. We've been doing that for some time now. But as far as listed property trusts are concerned, we've started taking a bit of profit there. We've done very well out of them, but we think it's probably time to trim it back a little bit and reduce the exposure. And then on the Australian equity side portfolio, we keep on increasing exposure towards that medium-sized companies that operate in niche markets, in particular with where they've got a bit of international exposure as well.
Thank you, Fred. Obviously, just a quick rundown. As always, any questions, please speak to your advisor. There's obviously further information in your quarterly review. Everyone's situation is a little bit different, so please speak to your advisor to make sure that everything's in line. We look forward to helping you in the future. Thank you.